The Ecofin meeting of the European finance ministers in Poland over the weekend ended without a resolution on whether to release more funds to help Greece. The US Treasury Secretary Timothy Geithner was also in attendance, calling for a larger EFSF. With questions remaining about Greece, the German political motivation, Eurobonds and the next ECB move, the Eurozone crisis continues to make headlines. Joining me now to evaluate the latest from Europe is one of the most recognised commentators on macroeconomic policy in the continent, Carsten Brzeski, the senior economist for ING in Brussels and former economist to the European Commission. Carsten, thank you for joining me. Over the weekend, PM Papandreou cancelled a trip to New York and held crisis cabinet talks, which continue today after it was announced Eurozone ministers were delaying the next bailout payment for Greece. Do you think we're moving closer to the prospect of a Greek default?
I think we are not really getting closer, because what we see right now is the typical horse trading and negotiating that we've seen over the last year between the Greek authorities and the European and IMF authorities. I think that we will still get a last-minute compromise between the Greek and the ECB, IMF, European Commission, and then the other Eurozone countries, so that Greece can get the next tranche of its loan, which would be by the end of September, early October. We have been talking about this for more than a year, but I think that politicians have not been talking about this for more than a year. We only see that this idea of a default, or rather call it a debt restructuring, is only emerging in politicians' minds right now. It's just really something of the last weeks. So what I think is that really, if you look at it right now, a Greek debt restructuring is in the interest of no one, because it probably would lead to too much contagion, and in practical terms, it's very hard to implement.
Meanwhile, in Germany, Angela Merkel's coalition has suffered another state election setback. Are anti-Euro positions becoming more significant in Germany, and should we be concerned?
I think it's really something we have to keep a close eye on. It is something that is not really fashionable right now, but we've seen that from Angela Merkel's coalition partners, these voices, these statements are coming up. To be honest, I think the party to watch right now is Merkel's junior partner. It's the Liberal Party, the FDP, because they've now had 5 defeats over the last year. They clearly are in an identity crisis, and for this party, a way out of the current, let's say, political crisis might be to choose for a more anti-Euro, pro-D-mark policies, and I think this would, of course, really be the end of the current German coalition.
One issue where Merkel has remained against further European integration is Eurobonds. Jose Manuel Barroso has said the European Commission will put forward options for possible bonds this week. Do you think these are becoming more likely, and would they work in solving some of the current problems?
If there is at least one topic on which the current German government agrees on, it's a no against Eurobonds. Would they work? And that's also an interesting thing. No, because they would not solve the current crisis. Eurobonds might be kind of the crown of a political union in the Eurozone. But if you only introduce Eurozone bonds right now without having a political union, without having this really fiscal or transfer union, they wouldn't work, because they would be a clear invitation for moral hazard. So I think Eurobonds might be something which could solve the future crisis, but only if we are moving towards a political union.
Finally, one tool which is already at the ECB's disposal is interest rates. Do you think we're likely to see a cut before Trichet leaves office at the end of October, or at the beginning of Mario Draghi's term?
Right now, I think it's a close call. Why? At the current juncture, I would say no. Neither under Trichet nor in the first month of Draghi, because what we do see right now is a slowdown. We're not in a recession in the Eurozone yet, and we still have high inflation rates. But I think that we need to wait a couple of more weeks, and if the economic situation was to deteriorate further, so if all the confidence indicators out in the coming days and weeks really show or would point to a recession, I think the risk is still there that there would be a rate cut. Looking at the, let's say, the political game, and whether it's going to be Trichet or it's going to be Draghi, I think it probably would be easier to sell to the public, especially to the German public, if Trichet leaves with a rate cut, and if it's not Mario Draghi entering office with a rate cut.
Thank you very much for joining Dukascopy TV, Carsten. Stay tuned for all the latest and more exclusive interviews. Goodbye.